Hi guys. Today we will analyze Dow stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock's overall performance in the market is below average. Also recent evolutions are not positive. Both the medium and short-term time frames give negative signs. The long-term trend is still neutral. It is advised to wait a little bit longer to see how this turns out. Strong support levels are around $49 and $44. Next strong support levels are around $40 and $35. Strong resistance levels are around $52 and $55. Next strong resistance levels are around $61 and $70. In the last month the stock has been trading between $48.30 and $56.70 range. It is currently trading near the lows of this range. The stock has an average volume of 6.1 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 11% per year, for last 5 years. We see that the average profit margin of the stock has been around 3% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 178% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Dow Company: bad, average, and good. First scenario. Dow will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, -4%. Future profit margin would be low, 3%. Future free cash flow to net income rate would be low, 70%. In this case, the fair value of the stock today would be $24. Second scenario. Dow will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, -1%. Future profit margin would be average, 4%. Future free cash flow to net income rate would be average, 80%. In this case, the fair value of the stock today would be $34. Third scenario. Dow will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 2%. Future profit margin would be high, 5%. Future free cash flow to net income rate would be high, 90%. In this case, the fair value of the stock today would be $48. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 9.17. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Dow, analysts forecast growth rate around 1% per year in next 5 years, and future P/E around 7. Again, I will use 3 different scenarios for Dow Company: bad, average, and good. First scenario. Dow will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, -4%. Future P/E would be low, 6. In this case, the fair value of the stock today would be $16. Second scenario. Dow will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, -1%. Future PE would be average, 7. In this case, the fair value of the stock today would be $25. Third scenario. Dow will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 2%. Future PE would be high, 8. In this case, the fair value of the stock today would be $37. As you can see, today the stock is overvalued, $50, even if we expect the company's high performance in future. While the company has a good profitability rating, there are some minor concerns on its financial health. Also, the stock is expected to show a very small growth in revenue in the next 5 years, 0 to 1% yearly. Based on that, the stock looks overpriced at the moment. I may consider buying the stock for the dividend, when the stock drops to $40. Company's strengths. Dow Incorporated, an American leading materials science company, was spun off from DowDuPont in 2019. The company has manufacturing facilities in 31 countries, and focuses on products for the consumer care, infrastructure and packaging markets. Dow should benefit from rising commodity prices, which have led to higher selling prices for its diverse set of products. Over the long term, the company should benefit from growing demand in both North America and China. The company's cash flow remains strong, and should continue to support the dividend, which yields an above-average 5.5%. The payout ratio is also a high 42%, making Dow one of the most shareholder-friendly companies in the materials sector. The company is well positioned to benefit from key end market trends, including resilient consumer packaging, durables recovery, and increased infrastructure spending. The company's return on equity of 37%, return on assets of 11% and profit margin of 12% are amongst the best returns in the industry. Risks. Dow faces a range of risks associated with commodity and energy costs, foreign exchange rates, environmental issues, litigation and capacity utilization. The company also operates in a highly concentrated industry with large global competitors, including LyondellBasell, Celanese, Eastman, Arkema and BASF. The cyclical nature of most of its chemical products, consisting of periods of capacity shortages, followed by periods of excess capacity. Dow's end markets, while diverse, are also cyclical, which can result in periods of pressured volumes and margins. Based on estimates for the next 5 years, the company will show a very small growth in revenue. The revenue will grow by 0 to 1% on average per year. The earnings per share is expected to grow by 2% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.